Hey guys, today we are looking at Exxon Mobil Corporation, ticker symbol XOM, and is this still a buy going into 2022? You can see it's currently at $63 a share, just down from its all-time high of about 66. I was telling you guys to buy this stock back in February when it was about $44 a share, so you would have had a nice 40% gain since then. Definitely beat the market with that one, but is it still a buy right now? We're going to look at discounted free cash flow, buffer Graham intrinsic value, and the fundamentals of the stock. Then look at the technical analysis for you day traders out there, right? But first, can you please give a like on the video? Let's try and get it to 20 likes. Thank you very much, but let's quickly get into it. Also, just want to go back to 5 years here because you can see where Exxon is. So it was decreasing basically over time, and then the pandemic absolutely hammered it down to 27, which was its lowest, and then once again rebounded and then down to 30. I was buying around about November, which was an excellent time, and then started doing my videos for this in February. I misspoke before and I said it's all-time high. Basically, I was meaning all-time high since the drop of the pandemic. So the highest it's been since back end of 2019. So let's have a look, and is this still a buy? Right, so first, ExxonMobil has $266 billion in market cap, $63 a share, 52-week high of 66 and a 52-week low of 40. Pays a very, very nice dividend, 5.59%, and the ex-dividend date is the 10th of Feb, so buy before then if you want the dividend. So is the P ratio less than the market? No, it's a fail, NA. Exxon is not a profitable company right now, so we'll be going into that in a second, but don't fret just yet. Is the revenue increasing? No, two fails off the bounce, 280 billion to 240 billion. But if we just look at the revenue, you can see, yes, it is decreasing, but massively up from the pandemic year, which was 178. So it looks like it's increasing and almost to 2019 levels. So that is good, but a fail nonetheless. Next we want to look at is the profit increasing, and we know it's negative right now. 20 billion in profit previously to -6. And just going back to Yahoo Finance, yes, it was decreasing, but it was -22 billion in 2020. So that is almost 17 billion increase, but still negative. So a fail. Next, are they buying back their shares? No, they are not. 2.65 to 2.99. So they've increased their shares, they've diluted shareholders. But they have had to, with the company being negative in the pandemic years, afford its dividend and things like that, and continue to survive because obviously oil and energy companies were hit pretty hard with all the lack of travel. So that is a fail. So we've currently got 4 fails, despite the fact that says NA, but we do have 4 fails. But finally, a bit of light there. Free cash flow, 16.4 billion to 23.3. So that is a pass. That is a check mark. So what does that give us? Well, obviously it only gives us 1 pass out of the 5 and a free cash flow ratio of 11. So that's 266 divided by 23.3. That is 11.4, which is pretty low. I imagine once it gets profitable, we will see a similar P ratio in the future. And is the dividend safe? Yes, it is, but it is quite a lot of the dividend, 23 billion in total free cash flow with about 15 billion in the dividend. So safe, but you would like to see more free cash flow. Now we want to look at the Buffett Graham intrinsic value and discounted free cash flow models to give my fair value of the company. I've calculated future free cash flows. This is a bit conservative on the free cash flow estimates as well. You can see 2022 is lower than 2021, but still higher than 2018. So what does that give us? Well, with these discounted free cash flows, it would give a fair value of the stock of $112 a share, which is a 78% discount. So discounted free cash flow says it's a massive buy. Now, if we look at the share price, you would say that probably isn't too realistic. The last time it was $112 a share was back in 2014. In fact, that would be an all-time high. But you can see it has been decreasing, but has rebounded quite strongly. So discounted free cash flow does really like the stock. But the problem is these type of companies with high dividends and in this sector would probably struggle to get that. So it does have a lot of free cash flow, and it clearly is undervalued in this respect, but to get 112 will be quite difficult. Next, we want to look at the earnings per share, the Buffett Graham intrinsic value, which looks at earnings per share. As you can see, earnings per share is negative, so it's not going to work. But if we compare to what we saw in 2019, the earnings per share was about $3.36. And this is an expected growth rate of 1% over the next 5 years. Analysts overall are pretty negative, but if we look at their analyst estimates on their revenue, you can see it's 18 and 7%. So let's just go on the lower side to about 7% here. and that would give you a fair value of around $75 a share and a grain price of 56. So undervalued there. If we go to the more bullish side, you can see in 2020 it was an 18%. Let's just increase that, meeting about the middle, we'll say 13%. That would put it up to $115 a share, which is roughly in line with what the actual calculated stock price is. Fair value and grain price looking good. So the models do say it is a buy on the bullish side, but if we just go back to that stock chart again, if you were to trend down, and let's just actually do this here. If we were to put some lines here, because who doesn't love lines, you can see that it is been decreasing at about this rate. And if we go to the high side as well, definitely has some room to grow, but that was definitely been the low side. If you discount the pandemic, which was very bad for the stock, you can see that it has been trading within this sort of channel here. So it does have room definitely to go up to about 74, 75 if it is in this decreasing pattern. But let's just have a look at some of the technicals right now anyway. First, we will look at the moving averages. And this is, oops, the exponential, sorry. We want just the moving averages normally. Moving average. And we want a 50-day, 100-day, and a 200-day. So let's get the 50-day in green because it'll be the shortest. And I imagine what we're going to see here is pretty bullish price movement because the stock has had a very, very good year. And if you were to ride the momentum, then definitely this would be a buy on the moving averages. So you can see right now, just when I'm adding the 50-day and 100-day, the 100-day has only been broken once this year. The 50-day has only been broken briefly in this down thing in July, which would have been a lot of bad news with the pandemic as well. And if we go the 200-day, I would imagine this has been a pretty solid line of support throughout the entire time. Yeah, there you go. So you can see it held that throughout the entire time. So what are we seeing right now? Well, on the more recent side, the 50-day has crossed the 200-day, which would be a bullish, 100-day there, which would be bullish. But right now you're seeing that the 200-day has crossed the 100-day, which would actually be a bearish signal. So despite the good momentum, there are a couple of bearish signs on the moving averages right now. Next, we want to have a look at the, on the MACD. Sorry about that. That is a alarm for getting up and feeding my cat again. So you can see on the MACD, oh, this is a very good sign here. The MACD has crossed to the positive once again, and these lines are going up. So MACD is saying that this would be a buy signal. If we compare to a previous MACD switch in August, you would have bought at this point, and then you could have took profits at any point in time, but then you would have sold here. So you would have bought at about $54 a share, and then sold at about 65. So that would have been an excellent purchase there. So it is looking like, once again, some bullish movement. And then finally, we want to look at RSI. So that's the Relative Strength Index. On the daily, it's about medium, not overbought, oversold. But if we have a look at the weekly, you can see it is trending to overbought on the RSI, but still nothing too massive. If we look to when this is oversold, it's really the buying opportunities here. Bottom of the pandemic, massively oversold, buy. Once again here, massively oversold, buy. Right guys, thanks for watching. Please give a like on the video if you enjoyed it, and I'll catch you guys next time.